Joining us now on set is Stephen Jones, CEO of UK Finance. Jane Foley is the head of FX strategy at Rabobank, and she is still with us. Let me take the conversation to yourself. First of all, Stephen, welcome.
Thank you, Manus.
Welcome to our new shop.
Lovely, beautiful building.
Thank you very much.
Very shiny.
Send Mike an email. Now, let's talk about financial services, because the whole discussion about how we get to move on possibly to a trade negotiation, a transition period, is almost in splendid isolation. You have a proposal which calls for mutual recognition in terms of regulatory approach. What does that mean? Is that joined-up drafting of financial regulation? What happened to, what was it you said, Anna?
Taking back control.
Taking back control.
Look, I think this is a very unusual trade negotiation. It starts on the basis that we have harmonised regulatory systems between the UK and continental Europe and heavily interconnected financial services, which means that European companies and institutions are very dependent on the provision of financial services from London. And frankly, there are quite a lot of financial services in London that are provided by banks that passport in to London from the European Union. So when you start with that position, you want to try and retain as much as that you can because of the mutual economic advantage and disadvantage, frankly, of disorderly disruption happening. So we've constructed a very detailed framework for a trade in services agreement that could be part of a free trade agreement. Okay. That starts, as you say, based on the concept of mutual recognition. That is that the regulators work very closely together. That is that regulations stay broadly aligned and that there are detailed negotiating maps to the extent that you wish to diverge substantially outside the rails of the predetermined mutual recognition that you've agreed as part of this agreement. The key thing is you are partially taking back control. You acknowledge that there is strong mutual interest in having rules and principles that are similar for markets where that is critical. And what we're talking about here are really the wholesale financial markets. We're talking about capital markets, we're talking about derivatives, we're talking about foreign exchange, not necessarily talking about retail banking. We're talking about those markets that already operate on a highly cross-border basis, where national barriers and national regulations actually have little bearing on what actually happens.
So you move together on the areas where it makes sense to move together, and there's a allowed divergence or managed divergence, I think you refer to it as. In terms of the free trade agreement, then, that you want to see set up between the UK and the EU27, free trade agreements don't normally include financial services, or it hasn't. You know, the Canada one, for example, that many refer to, has not. How much of a challenge is crafting something that works, or is it all about the politics?
It's both. I mean, in drafting it, we've sought to use trade concepts, WTO concepts, modes as they call them, and recognise concepts within that so that it can fit within the language and the framework of a traditional agreement. But you're absolutely right, CETA, the Canadian agreement, which is being finalised with Brussels at the moment, is far less ambitious than what we're proposing. Indeed, when we've talked to the Canadian negotiators who've worked with Brussels on CETA, and they've said to us, you absolutely do not want to accept this, given the close interconnectedness between your financial services system and the EU compared to ours. If you ended up in a CETA position, the UK would be substantially worse.
Are the Canadians being helpful, then?
They're talking to us. Okay. At the end of the day, sharing war stories is always helpful in terms of figuring out how you're going to get a position agreed.